Good morning, everyone. Good morning, traders. It's Tuesday. It's 11 a.m. Well, it's 1 minute before. It's 10:59 a.m. And we are live with Top Trades. Greg Guenthner. Good morning, my friend.
Hey, how's it going?
Doing well. All right, let's do a quick little volume check. Every now and then, my audio settings get a little funky. They're looking good. You're sounding good, Gunner.
You sound good to
Well,
me.
all right, perfect. That's sounding good. We'll go over the agenda real quick here. For anyone that's on early, we've got a good amount of stuff to cover today. I said it in the chat there. By the
Mhm.
way, chat's open. If you got anything to say, if you want to say hi, if you've got a comment, you got a question, throw it in the chat. And also, if you've got any tickers that the group could cover, we can go through those as well. But we got a bunch of stuff on the agenda today. So let me run down the notes that I got from Gunner in the green room. We want to talk about summer chop. Are we entering difficult market conditions? We want to talk about some of the semis. We're going to talk about some software meltdowns. We want to talk metals because we're seeing, as Gunner put it, some sharp reversals across the board. And then just sort of what else is there on the bullish side? What can we look for? Um, Another big elephant in the room, crypto. Bitcoin knocking on the door of 70 again this morning. I think it traded a little bit over 70. It's been back and forth. We can maybe talk China. We can maybe talk some alt energy, or as Jim calls it, Jim Rickards, the green new scam. We could talk about some of that. We're starting to see a little bit of froth popping in there. And why not the crowd favorite? Roaring Kitty is back in the GameStop saga. The GameStop, it started again earlier this week. So, Gunner, I leave all of that stuff there for you. That's your agenda. We've got everybody on the call. We might as well get kicked off here and rock and roll. So, what should we cover? What do traders need to know for this week? And then let's get to some top trades.
Well, it feels like we're already entering choppy summer market conditions. I don't want to jump the gun on this, but you have to remember that we had a nice big melt up rally heading into the holidays at the end of 2023. It extended higher, the mega caps, the semiconductors all breaking out. You had Nvidia, super microcomputer, all those big semiconductor names just exploding higher and just dragging the market along with it. And this lasted a lot longer than most people really thought it would. At least it went farther than a lot of
Yeah.
people thought it would. And now we're in a situation where it's June all of a sudden. I don't think there's many eyeballs on the market right now. I think that everything that's happening with the meme stock mania or lack of meme stock mania, I think it's very telling, and it's showing us that these what would you call them, meme traders, the more enthusiastic YOLO traders, let's put it that way. I don't
Yeah.
think they're out in full force in this market right now. It's just not a really good time of year for that type of action. It's not 2021 anymore. It's not lockdown trading season. We don't have as many eyeballs on these type of trades. Yes, crypto is still looking really good, but as far as follow through goes on a lot of this meme stock stuff that popped up a couple weeks ago, we're just not seeing it. And if we turn to the charts right here, I think it's really obvious that these echo booms are, getting smaller and smaller in magnitude. We had the big 2 day rally in GameStop. This is GME, GameStop, the big roaring kitty stock, when he started posting on Twitter again after a 3 year absence, just posting memes, nothing specific. And it shot the stock up for 2 straight days, and then it promptly went right back down to the bottom of its range. And then once again, this past Sunday night, he starts posting about this gigantic position worth more than $100 million in GameStop, which is outrageous, obviously. But he posts about his position. He does get a bump off of that, but it faded throughout the day. It was almost a clean double when the market opened, and then it finished the day up only 21% or so. And then today we're a little bit lower. It feels like they just don't have the juice to force these squeezes right now in this market. And again, I feel like that's pretty telling. We're coming to what feels like the end of a pretty strong momentum run right here. We had the little mini pullback, this 5-6% pullback here in late April. It promptly got bought, and now we're entering some serious chop. Uh, Again, nothing to be scared of necessarily. It just feels like a lot of the stuff that normally is following through to the upside isn't following through to the upside right now. We have a lot of just ping-ponging around when it comes to the hotter stocks and sectors. Friday's action was really weird. We talked about that a lot in the chat, how we had a situation where on Friday, the NASDAQ, and this is the NASDAQ 100, the NASDAQ composite was down almost 2% intraday on Friday and then ripped higher to, and you can see the candle right here on the NASDAQ 100, ripped higher to almost close near break even at the close right there. So we had people coming in and buying, and then not a lot of follow through on the first trading day of June. And then today, the market's been fairly sluggish. We were red in pre-market trade. There's a lot of not so bullish chatter now sort of popping up in the market regarding rates, what to expect from the economic data this week. You know, can this bad news is good news type market keep on going, or is it going to morph into a bad news might start becoming bad news again, and people might stop worrying about like when's the first cut and start worrying about like, well, is the economy slowing down? Are we in a little bit of trouble here? Are we going to start spinning our wheels? And it feels like that narrative is kind of slowly percolating and coming to the surface here. And you can see, like, again, no real trouble in the averages right here, but at the same time, there's more decliners than advancers. There are some big resets in the commodity space. Crude has been down for what? This is its fifth straight day, I think. Moving lower right here, down back to where it was in February. You can see crude just falling off a cliff here after retesting 80 right there. Couldn't hold it, and it's now all the way down to 73. So we got crude sinking into June right here. We have really, really hard resets in that big rally in copper. We know how it went kind of parabolic right there. I thought it would catch somewhere around here and at least mark time and move sideways before maybe trying $5 again. Nope. It has been pretty weak. We did get a bounce yesterday, but weak again, and looks like a bearish engulfing candle potentially forming again today. Silver is off almost 4%. Again, not the end of the world, but at the same time, you can see how it started failing here at 32, and now we have a sharp move lower right here. It looks like all this stuff needs to reset, and what a perfect time to do so. We could get into the summer chop right here, and we could have some tug of war here and have a lot of stuff that just ends up range bound for a little while, really frustrating the shorter term traders.
Yeah. And just to like put a fine point on it for anybody that's tuning in, when we're talking about Roaring Kitty, that's the guy that was on Reddit. He's like the cheerleader of sort of the meme stocks. And these are these like popular stocks that whether they're good companies or not, there's all these, retail investors. And again, these are frothy trader, like YOLO type trading retail investors. But what Gunner's sort of pointing at is that this might be an indication that froth and that retail, like it's a decent indication that we might be running out of a little bit of steam. Because if you don't see follow through on something like GME, because we had comments about this a few weeks ago when we covered Roaring Kitty and GME, and people were like, "Why are you talking about this?" But it's an indication that retail investors might not be there and the money might not be there, because that's what you need in 2020, late 2020, and then 2021. You had heavy duty retail investors coming in. You had money pushing all over the place. And that's what could sustain some of these rallies. Right now, we're seeing all the rallies, a decent amount of the sectors we've been covering are taking a breather right now. And you got to ask yourself, are we just in chop? Is this the end of something, start of something? And that's kind of where we're going. But that's why you want to look at retail investors, and why something like a Roaring Kitty and the GME chart might matter. It
Right.
seems silly, but it's an indication.
The whole idea of that is that, if you have enough retail investors there, you can bully a stock higher and create these short squeezes just from, just memeing the stock. Like I said, like if everybody buys at the same time, then the shorts have to cover, and they can't seem to amass these short squeeze armies, much anymore. Yeah, they can do it for a short period of time, but it's not lasting. And then we had the news late last night that, E-Trade is considering kicking Roaring Kitty off of their brokerage. It doesn't want to deal with whatever the implications could be of this type of and maybe it's manipulation, maybe it's not. You can sort of you can put it into whatever category you want to put it into, but they really don't want anything to do with it. I think it's a legal gray area for these people, and they just want to stay away from it. And like I said, the main thing is the follow through just isn't there in these stocks. So it makes me wonder, is this just a kind of a sentiment indicator and showing where we might be along in this rally? We don't really have the enthusiastic bulls coming out of the woodwork here to buy these, quite frankly, like incredibly overvalued garbage stocks that they use to try to, pump these memes.
Yeah. What else are you seeing? I mean, because summer chop is very important. Everyone knows the phrase like sell in May and go away. A lot of people say like you don't want to be trading in the summer because it's lower volume. Give us an idea of what we could be setting up for here if we are going into some sort of choppy summer session, or at least a few weeks of it or whatever. What should traders be aware of, and what should they know?
Well, I don't think it's anything you necessarily need to be afraid of. I don't think it's gonna it might not be as painful as you might think. I mean, we might be in a directionless market for the averages, but there could be other stocks and sectors that pop up and take the baton and run with the market right now, under the surface of the averages. Because like I said, we were in such a mega cap and semiconductor dominated market for so long, and those stocks are still holding up. I mean, if you look at SMH, it's not, obviously not the end of the world for the semiconductors. We're right up here by these highs. It's just that action has gotten a little wonky right here, and it wouldn't surprise me. This isn't a prediction. I'm saying it wouldn't surprise me if we saw these stocks take a break. I mean, if you look at the action in Nvidia, and we joke about this all the time over at the trading desk, that if Nvidia is down, they got to call in the National Guard and force people to buy the thing because it's not allowed to have any red trading days. I mean, we see these runaway gaps in this stock. It did consolidate for a couple of months here, and then it just absolutely ran on earnings, up 9% one day, 3% the next, then 7% on top of that. And it's starting to get a little choppy as it reaches up here into the stratosphere. Maybe we have a situation where we're going to get a sell the news event with Nvidia. We have a stock split, this 10 for 1 coming on Monday. That's great news for retail, but maybe it also means this is going to be when Nvidia takes a bit of a hit and rests right here. That would make perfect sense to me when you have this moment that everybody's anticipating, much like, let's see, what do we have in recent memory? We have the Bitcoin halving or the Bitcoin ETF approvals. These are big events that everybody considers to be, hey, this is bullish for this particular asset. And then when the rubber hits the road, when it comes down to it, the stock or the asset doesn't react like you think it should off of that news. I think we could very well be in one of those situations with Nvidia. We have a rally that's very long in the tooth, very overextended. Obviously, top performer in 2023, top performer so far this year. Perhaps, it just needs to let some of the air out right here, some of the pressure off. And what a perfect time it would be to do that after this split. Immediately after this split, you have a bunch of new people piling in who like the idea of the shares not being $1,100 a piece. They come jumping in at lower prices, and then all of a sudden stock corrects 10-15% and then ends up in some choppy range for several weeks to several months. That would play out perfectly. It would make a lot of sense. That's how markets operate. And we've seen little rumblings and some stuff going wrong, once we get past the big names here too. If we look at like CRM, the Salesforce debacle right here, this got a lot of play on Thursday of last week when it, whiffed on estimates and earnings, and the stock was down 20% in the day. I mean, we're talking about a Dow component here and a pretty major software company. Totally fell apart on earnings. A 20% move is nothing to scoff at with a company this big, and it took down a lot of other software stocks along with it. Is this kind of a preview of what we're going to see right here, kind of resetting expectations into the summer? If we learned anything over the past earnings season, which is now starting to wind down, it's that if you're a tech company and you're not really impressing people and really upping your guidance, you're getting slammed. It's feast or famine out there, because expectations are, you're going to perform like Nvidia and you're going to crush the world, or we're just going to sell your stock and we're going to hop over into the semiconductors. It's as simple as that. And so companies that don't perform, that disappoint a little bit, their stocks are getting absolutely punished. And I think we need to take that into account. I mean, we've seen what's happened with the Kathy Wood specials over here in Arkland. And obviously, this is not a perfect proxy right here of the tech growth sector, but I kind of like to use it as a barometer just to see how people feel about some of these popular growth stocks, because I feel like the entire ARK Innovation Fund is just packed with these big narrative growth names, not necessarily the best performing ones, as you can see here, but the ones with the really good stories that everybody seems to really latch onto. That's what's composed of this ARK fund right here, and you can see it has not looked good this year at all. What are we down now year to date in ARK Innovation? Down 17% year to date, really close to those April lows. I mean, yes, a lot of stocks, even tech stocks, got caught up in that correction in April. These tech growth names were hit especially hard, and you can see the rebound pretty insignificant so far. They did not have the May that we saw in some of the other mega cap tech names. A lot of these stocks lagged, and now we're right back down here, close to these lows. If we see ARK break below this $41 mark right here, I think these stocks are in for further trouble and more selling. There's just a ton of names throughout this group that you start pulling up charts, and you can see these bases that look like they might be coming along the right side of them and about to break higher, and they just aren't doing it. They're failing, they're leveling off. So it feels to me like these guys are already in summer chop mode, and they have been for some time. What if the rest of the market kind of follows along and starts to do kind of the same thing? And these stocks just fail to gain traction. They fail to hold those breakouts. And again, it's not just in tech, it's not just in mega caps, it's not just in semiconductors. We're starting to see some of this stuff sort of ripple throughout the entire markets. We talked a little bit about metals earlier. I was looking at GDX earlier today, and you can see here, I mean, I think it's safe to say that we might be in false breakout territory for the gold miners right here. This has been kind of a tough trade recently. They got a little bit wonky back in April, and then they broke to new highs right here, getting over those April 2023, May 2023 highs last month, and now they're starting to fail. The whole sector is down more than 3.5% so far today, and back into this range. I'm not bearish gold. I think longer term gold continues to move up. The metal looks good, but as far as these momentum traders, these miners go, it looks like maybe they need a harder reset right here. Maybe they need to be back down here in this range between 33 and 35 for a little while to shake out some of these bad feelings. I'm not really sure, but right now, this is not the most bullish chart that I'm seeing out there. And the fact that it wasn't able to hold here above these swing highs from a year ago, I think says a lot. And it could mean that we're in some choppier territory, not just for tech, but for the metals and the miners as well, which we're seeing kind of across the board with that hard reset in silver today. The same as in copper, like we talked about earlier. Summertime, man. I mean, we could just be in for some difficult conditions. We really have to dig down and find that stuff that could potentially, outperform.
Yeah. And again, I won't completely doom and gloom it, but some of this stuff could just be some of these last little dominoes to fall that, like, interest rates are actually crunching down on the, investors and on companies, and then, throw some more stats out there. It's like maybe jobs data is finally hitting home a little bit, where you're just starting to see some negativity, which would make sense that there isn't retail money out there, and people are getting a little bit more cautious on what they're trading, causing some of this chop. So there's stuff like, again, I wouldn't go all in on that doom and gloom theory, but that's something you got to keep in mind. And that's the one thing you do really well, Gunner, that you keep, your whole, the trading desk and your team aware of, is sort of like the layers of what's going on in the market. And like, this might be a time where it's like, well, like, obviously some of these trends are breaking down a little bit. Now's not the time to go all in on one of these stocks that you might have liked. Like, oh, I really wanted to get in on so-and-so silver miner or whatever. This might be a reset. And we might be waiting to find out where that next level is. So just keeping an eye on those kind of things. What about does crypto play into this any? What are you seeing there?
Well, I think it does, because generally I would try to group crypto in with more of the meme stock trades or more of the tech growth trades. And right now, crypto looks really good. And it feels like Bitcoin is building toward that big event that everybody's been watching. You can see here where, I mean, it's been teasing this
Yeah.
70K mark, and we talked about this earlier. And maybe I need to extend these lines a little bit since this consolidation's been going on for a while. But we're in the middle of a big, wide-ranging consolidation since what? Since early March right here, when it was breaking out and running toward those all-time highs. And now, after that fake out lower, we're back here in the middle to upper part of this range, pushing back toward 71, 72. If this starts really testing 73 and actually breaks out of this range, then I think immediately people are going to start talking about Bitcoin 100K and how soon it's going to happen. It just feels inevitable at this point with it building like this. Now, the big question for me is from, a 10,000 foot view, can Bitcoin get out and really run here if the rest of the market stays choppy? Or is it going to be one of those situations where Bitcoin tries to break out and it fails because, like we talked about earlier, the same thing with GameStop, there just aren't enough enthusiastic buyers out there to really move the needle and chase the thing higher. We had a ton of chasing earlier this year, obviously, with all those semiconductor breakouts. We had a ton of chasing in the Mag 7 stocks. The market was just moving higher without a lot of resets up until April. And then even after that, pretty quick and deep pullback in such a short amount of time, a lot of eager buyers came in and bought that dip almost immediately. So are we going to see them just as eagerly chase these breakouts right here into June, into July? I think that remains to be seen. But I mean, from just purely looking at the chart right here, you can tell that this looks bullish and this is setting up for at least a test of the high 72s, 73K area right here, and how it reacts to those levels, I think is going to be a big tell. Are we going to have a situation where Bitcoin comes up here, pokes its head above 73, maybe gets to 74 and really sucks some people in, at 3 a.m. on a Tuesday or 3 a.m. on a Sunday, and then retreats back into this range and then just sort of bounces around in the, below 70K for a while? I don't know. We could have a situation where it just this is enough, and this big choppy consolidation right here that we've been dealing with since March, April, May, all of a sudden all that pent up demand shows up and it just blasts higher, and there's just a flood of buyers that really takes this thing and pushes it into the 80s and gets people talking about 100K and excited about Bitcoin again. So we'll see what happens right there. Is the Ethereum catch-up trade still going to be on the table? Because this thing has been stuck in some sideways chop ever since this big 20% up day on the news about the Ethereum ETFs. That was a purely news-driven candle right there. And it's been able to hold this range right here, but can it really get up there and break 4K and start running toward its all-time highs, which are all the way up near 5,000, I believe, to catch up to Bitcoin? I still think that's an interesting trade idea, but again, we have to see it. We have to see it with our eyes on the charts before we, start chasing a narrative like that. Now, another big piece of the crypto puzzle that I'm watching right now are the crypto miners as well, because we talked about all the negative chatter around those miners back during the halving. I don't have all the details of it, but Matt, maybe you can fill in the blanks for me. But essentially, after the halving, harder to make money if you're a crypto miner. And I saw some more chatter about it last night, how crypto miner revenues are down something like 30 or 40% month over month. So is this narrative, is this really true? Are these guys going to be struggling in the months ahead, even if Bitcoin continues to rise? I'm not really sure. But looking at the charts, you can see here, this is CleanSpark, and this is like, this kind of supplanted Mara as like one of our favorite trading vehicles in the group. And you can see how sluggish it looks compared to the price of Bitcoin lately. We have Bitcoin coming up here. If this was a Bitcoin chart, and you can imagine the big consolidation, we have Bitcoin would probably be up in this region right here, getting up toward the upper end of its region, ready to test those highs. Not CleanSpark, not some of these other crypto miners. They've been down in the dumps. I mean, they're not falling apart, but they're by no means rallying alongside Bitcoin right there. So is that a big tell? Is that a big change that's going to be happening in crypto? Is this going to no longer be a viable momentum trade that really moves hard when Bitcoin and Ethereum start to move? We can look at Mara too. Looks a little bit better, I guess. I mean, on the daily since it's up today, but kind of the same idea. Riot's another
Let
big
the
one.
record state I switched. I'm very fickle in my Bitcoin miners, and this is not a large part of any portfolio that I have, but I was Mara for years. Then I went to CleanSpark for maybe the
Yeah,
last 6 months,
yeah.
and then probably took off like a month or so ago. And now that I've come back in, I'm into Mara. So we'll
You
see
took a
what
break and now
happens.
you're back on Mara. Any
Yeah.
particular reason? Just because? Um,
Yeah, I just liked the way it looked. There was a point where we were talking about this on these calls where we were just like every day Bitcoin's up and the miners are up. CleanSpark was just outperforming Mara. I think
right.
that tide has turned. Like just look at today, Mara's up 2%,
Yeah.
uh, CleanSpark's down. So that was not something we were seeing 3 months ago. So like
Yeah.
whatever that is, I know nothing about why it's happening, but I'm starting to see it on a just a daily watch list
Yeah.
sense. So why sit in an underperformer? I
Yeah,
don't know.
I get that. And also, like, if, I mean, even with Riot, and Riot looks terrible when we zoom out, like here compared to the other ones. But with this false breakdown right here, and this, it had such a quick and powerful recovery. It looked like it might be the dog that really starts outperforming them until it rolled over right here at 12 bucks and couldn't get back up off the mat. But this move
Yeah.
right here, that 10% move followed by a 23% move, followed by a 5% move in 3 days, that really looked like, okay, this thing's going to go and, and really surprise people and try to cut up here into the low teens maybe. And it just totally rolled over. And now we're back here below 10 bucks. Doesn't look like much is going on here. So as far as
What
I'm
about
concerned,
micro strategy? Maybe just pull
oh,
them up because they're different. They're not a miner. They just hold a bunch of
no.
Bitcoin. So they're gonna
Yeah,
they're
this is
gonna
more
look
like a
more
just a
like the price.
this. I mean, yeah, this is just more like a Bitcoin holding
Yeah,
company,
it's just a
wouldn't you say
Bitcoin
at this
chart.
point? Yeah, so it's a Bitcoin chart. It's a little bit different, obviously, but I think it behaves a lot differently. I think your other kind of like uh your other not minor but crypto adjacent stock play is Coinbase, and it looks
Yep.
pretty good too. Um, you can see here, and we can kind of adjust this. It's been a while since we really looked at this one, but I mean, it kind of held this whole, 200 to 210 area, wherever that might be, right there, and bounced nicely. So this is an interesting play right here. I kind of classify this with kind of like a Robin Hood. It's a it's obviously a trading platform that caters to a very different demographic than the big older ones, and it's probably has some wiggle room, for people to claim that it's improperly valued or undervalued or whatever else in this environment, which is probably why it's catching higher here. But that chart looks pretty decent actually. A little
Yeah.
a little more volatile than some people might like, but at the same time, it did consolidate nicely and it's trying to move higher into the 240s here. Not terrible. I'd much rather buy something like this right now than like one of the crypto miners, which like they seem like dead money walking at the moment.
Yeah. And all this stuff is like, I mean, if you're looking at it, like the underlying force is the price of Bitcoin on all these things, I believe. So you're like, if, and we don't know, but if Bitcoin has a pullback, and I think like adding on to what you were saying, Gunnar, when you look at the Bitcoin chart, we are in solid wait and see territory. It
Yeah,
could go up and make new highs, or it could drop 15K. Like,
yeah,
like it could go up 15K, it could go down 15K. And right now, I think it's just even money on both of those trades. And like if it goes down that 5, 10, 15K, any of those adjacents are just going to get hammered too. Like because you're buying a micro strategy or Coinbase, a lot because of the momentum in Bitcoin. So
yeah,
again, I just wanted to confirm and agree with what you were saying that like this just seems like we're in this middle, like you're in the middle of those bars, you're in the middle of this trading zone. Like, yes, we could look back 2 months and be like, oh yeah, obviously we went to 85K, like duh.
right.
Or you'd be like, oh yeah, money was tight, jobs data came in, everything's horrible, and we went down to 55K or whatever.
Yeah, I mean, I think yeah, we are in the middle of a big wide range of consolidation right now. My bias would still, in a vacuum, looking at this chart, would be higher from
Yeah,
here. I
I
feel
agree.
like I feel like the fact that it's pivoting, at the midpoint here and pushing higher these past couple days, and after this false move lower right here, which provided a nice shakeout. It didn't run immediately, but I feel like this is setting up more bullish than not. It just is a matter of what the heck happens when we get there, and how quickly does it happen? Do we get a real Bitcoin move where it's like you go to sleep at night and it's at 74K and you wake up and it's at 90K the next day? Is it one of those situations, or is it,
Can
kind of a
happen.
slow
True.
burn, retreat? I mean, these sound like big numbers, but they're really, it's not that crazy. I mean, just go back to what it was doing back in February. I mean, this was at 40,000, in late January right here. And then, you blink and it's up more than 10K, and you blink again and it's at all-time highs. So I mean, we know how Bitcoin tends to move. It's just a matter of, is it going to follow through? And will the market let it? Are there enough eager crypto buyers out there to really push this thing higher right now? And the market's going to vote on it really soon, and we're going to find out.
Yeah. All right, we're about 30 minutes in here. What about, let's just talk just big, broad top trades, wherever you want to go. Is there anything, because now we've got a good picture of sort of where the market is. We're in the choppy zone. There's a bunch of different sectors that have some question marks. Some have some upsides, downside, like we'll see. Anything you like for top trades right now? Any other sectors that you want to lock in on or that readers should know about?
Yeah. So right now, if you haven't guessed by listening to the first half hour of this, I'm not as interested in chasing a lot of these tech leaders and waiting for them to break out to the upside as I am in trying to find, like, what's the next rally going to be from some beaten down names. I feel like if we do get into a choppy or downside market at some point this summer, and again, this isn't a crash call or anything like that, don't get me wrong, but if we do get into more difficult trading conditions and the market is less directional, are we going to have any stocks or sectors that take the baton and run and try to outperform? From everything I'm seeing right now, I am guessing that that sector could be alternative energy slash solar stocks, pushing us ahead in the summertime if they catch and run here. The spark of all this was the stock that nobody wanted, First Solar, and this huge breakout at $200 out of the blue, back just a couple weeks ago, and it's run 40% since then, and it's consolidating really nicely up here near its highs. And the entire solar industry is now starting to get more eyeballs on it. The narrative is quickly changing. If you remember, back in January, these stocks had already started to roll over. And we can look at TAN, actually. We have a TAN trade. This is the solar ETF right here. We have a TAN trade on right now in the chat, with this thing breaking above this consolidation and trying to come out of this base right here. It is down today with a lot of other stuff, but it's still looking pretty good. But if you remember, these stocks as a group did not participate in the new bull market that started in early 2023. You can see here, they attempted to rally into February right there, lost their footing, and have never returned to that level right here. They totally melted down into Q3. And then when the melt up rally actually began here off of these lows right before Halloween in 2023, remember how the market just sort of popped out of nowhere? Sentiment was terrible. Everybody was expecting the worst. And then all of a sudden we got a rip roaring melt up rally into the holidays. Well, yeah, TAN rallied right there, but then as soon as the calendar flipped to 2024, it went right back down there to those lows as recently as April. So these stocks have been absolutely hated. They were catching downgrades as recently as like January and February, and it was the same old story. It was higher rates are crushing these stocks. Installations are down, prices are up, and everything's going wrong for the industry. And now we have that narrative shifting to, solar is going to be able to power all of the AI needs, because AI is going to need crazy amounts of energy, and we got to find it from somewhere. Solar is going to be a big beneficiary of that. And also, we have a situation where, hey, maybe things aren't as bad as we thought for some of these companies. Maybe the China tariffs from this administration are going to help the domestic solar companies when it comes to pricing wars. with the China firms. And so you can see already the gears are spinning because, like I said, price always moves first. We have a situation where we had a pretty major breakout here in First Solar, breaking above those those highs from last May, new 52-week highs for FSLR. And if we pull back far enough, believe it or not, we are right here near this confluence of highs from its all-time highs back before the financial crisis, back in spring and summer of 2008. Very different world
Yeah, what
from
was that?
back
Solyndra was still like probably in business at that point.
then. I
So
don't
some of
know.
the boondoggles were
Still in
actually still alive at that
2007,
point. It's pretty impressive to
2007, I
be
don't know.
almost back on knocking on the door there. That is, let's give a salute to First Solar. They came out of the grips of death.
Well, that's just it. Everybody hated these stocks, and so like it's very interesting to me that we have a very big rally in a very short period of time that's consolidating very constructively here, and it's coming with some very fast narrative changes, and analysts are all of a sudden popping out with like new notes about these companies and how well they're going to do, and so like things are happening pretty quickly in this group, and it's all because of this big breakout right here, and that's how things work. The price moves first, and then people start paying attention and say, well, why is this? And they start crafting these narratives around it, and we'll see if that continues to evolve right here. But I like this because obviously, a down and out group, kind of counterintuitive, when we talk about like how everyone was discussing like alternative energy and especially like EVs and stuff like that, very out of favor leading into this. And so maybe all of that's kind of spinning back. And I think a related play, and a week or two ago we were discussing what these solar and green energy funds are holding, what the big holdings are. One of the big holdings in these groups is Rivian, and it looks like it's trying to come out of something here. And I don't really have too many opinions about what's going to happen to this stock in the long term, whether this company is going to survive. I think it's got a lot going against it, obviously, in the current climate. But at the same time, when the market was down yesterday, Rivian was up almost 5% and is trying to push up toward those May 14th highs right there where it reversed. Is this, post earnings gradual drift higher right here going to create a nice move and potentially short squeeze this thing? Again, I don't know if we have the bulls in our corner to do something like that right now, but this is a pretty compelling look as far as I'm concerned right here. I'd much rather be focused on ideas like this heading into June than trying to figure out like just how far like Nvidia is going to stretch, up here in the stratosphere. I don't think this is the place to be looking, for a long side trade right now. I think you're much better off looking at something like Rivian and saying, okay, if this thing breaks out, it closes, above like 1160, 1175, can we get a quick run to 13? And then from there, can it continue right there? This is a good risk reward opportunity because if it starts to move, you're in a really good position to benefit from a fast move. And if it starts to move against you, you know basically where you're wrong right here. We talked about that
Yeah.
last week, where you have a situation where, if this thing just doesn't turn the corner, it keeps on chopping along, you can get out of it without a lot of damage. But if it really goes in your favor, it can go quickly and, can provide, with you with some nice gains as a swing trade or a position trade from here.
Yeah, like possible downside is what, 10%, maybe 15%, and then the upside is a double.
Yeah.
So that's the kind of setups you want. And you got to kind of forget that we're in the market. Nothing's easy. You got to forget about that name. Because if you're like me and you're looking at Rivian, you're like, oh, that might be a zero. But that's why it has this potential. It's got this
Right.
potential because all the sellers might be, like they might be out of ammo or whatever. Like
Well,
everyone sold it.
a similar but not so similar, at least along the same brain waves of that would be like the Carvana trade from
Yep.
last year. Like Carvana was like, oh, maybe this thing's gonna go bankrupt, and then it ends up going up 1,000%. So, you can find these windows where, there's obviously a ton of fundamental risk with the company and then price is setting up. And then if it goes and it starts working in your favor, then you're in at a really good price and you can really capitalize on a trade like that, from a longer term perspective, which is really nice. I think the same situation with this is kind of how we can view the China snapback trades as well. We've been talking a lot about how China is kind of like that counter narrative trade that's moving higher and that really caught legs earlier this year and started to move. And now we're kind of in a situation where we've had a pretty big pullback. Where do these things catch? And if they catch, can you catch these things on a bounce? This is KWeb. This is the China Internet ETF. So pretty specific play right here. I mean, is it going to catch somewhere here in this neighborhood and bounce? And if so, is that a good risk reward opportunity for this thing to snap back and start to move again? I don't know, but it's something worth watching. And the same thing with like a specific stock in Alibaba right here. It's right back down here to its reset zone. I mean, here's this base breakout right here. Maybe it got a little too far ahead of itself, and now it's resting down here near 78. Is this a kind of play where you could say, all right, if I get a nice green candle here, obviously I would wait. I wouldn't try to buy it on a red day, but if you get a nice green candle, you got a perfect risk reward opportunity here to try to ride this thing back up to $90 and beyond if it catches and really moves again, because maybe we're out of that initial rally where you get the disbelief rally, you get the breakout above the base, and then you get the hard reset right there. Have we shaken enough branches to get a nice big green candle and have it bounce in this area that was resistance that could possibly turn into support here? That could be a really powerful play right there from a trading perspective. And it's one of those ones where if you catch it at the right time, and you're set up with some early gains, you have a nice cushion to ride out any volatility, and let a trade like that develop over the course of weeks and it turn into a really nice position trade for you.
Yeah. All right, let's do real quick, just rapid fire. Have a few comments with some tickers. Again, I don't think there's a ton. SMR is the small nuclear reactor. So if we want to look at SMR, the chart's I think it's been kind of breaking down.
Well, yeah.
So you want to look at that, and then TLNE is another nuclear play.
Right. So SMR, I mean, yeah, this is incredibly volatile. Obviously, a small one. We can see how this thing behaves just by looking at what it did in March. Obviously, big breakout right there, and then gave it all back following some earnings, and then it caught right down here after basically giving 100% of this big rally from that consolidation zone, started moving again. This is a tough trade, obviously. This is kind of a white knuckler. If we just zoom out and look at what's happening in uranium right now, you can see how weird things are getting. And this is always, like I've said this has been, we talked about like our trade attempts at like CCJ before and things like that. Tough to time, really. Uranium has these huge swings. And you can see here, it looked like it was really going to break out and extend just a couple weeks ago, and it's fumbled the bag since then. And then yesterday, down 2%. Today, I think we have all these hard resets and things like copper and uranium's following suit. URA, this is the ETF, down almost 4%. So I mean, it's hitting a rough patch right here. I don't know how long it's going to need to reset in this area. Obviously, the more you zoom out, it looks fine, but you get these moves. Like we could zoom into some of these other areas right here where it really starts to go, and then it fills the gap, and then it gives it all back, and then starts over again. I mean, are we in one of those situations here? It's entirely possible. I don't want to come out and say like, oh, this is dead money walking now. The uranium bull is over. I think we're still in the early innings. But from purely a chart perspective, to me, this looks like it's going to need more time now that's below 32. It's going to need to sort of like bleed off some of that enthusiasm, probably.
Yeah. I'll throw one more. This one's obviously not a meatball. It's more of a curveball. But if we look at FCX, you guys have a trade on there. And again, I can feel a little bit of this one too. But the question came from Ken. And again, Ken, I say this with respect, but he was asking like, why would you let FCX go negative, like whatever it is in the portfolio?
Yeah.
And I'll frame for everybody out there, right? A lot of us are seasoned traders here. If you haven't had an option go to zero, like just keep trading options and then you'll get there. And I think it's one of those, what's a joke? Like the crystal ball store ran out of crystal ball. I don't freaking know. But right, Gunnar doesn't have a crystal ball. We're trying to look at the risk reward on a daily basis here. Like when you're putting it, because like the other thing is too, you could have some sort of weird mindset. I've seen this in the publishing industry. You'll have people that are like, oh, we made 4%. Let's take it. You can't go broke with taking gains. And it's like you
Right,
kind
sure.
of like in options, you kind of can. Yeah, like yeah, if you're just everything you do goes up, but you kind of can if you're not playing the risk reward on like a daily basis. Like, is that 4% giving you the reward for the risk you took? So yeah, we're like FCX, it just seems like it's in that spot where we're having a reset. So what, any thoughts on that? And we can wrap it on there.
Yeah, sure. I mean, it broke out nicely for us, obviously, in May, and we had some modest gains in the middle of May right here, and then we were hit with all of a sudden copper gives us a little jolt lower right here, and it gapped down lower 5%. And I said, okay, we're back here to this kind of breakout zone right here. Let's see if it can hold and move higher. It did last week. It pushed higher, and then it got sloppy. On Friday, surprisingly, and we can take it, let's pretend that we didn't know what happened this week. But on Friday, I'm not gonna be able to give you a good view of that, but right here, this candle, I mean, it did really well. I mean, it finished higher almost 1% on a day where the market was very wonky, and then not much yesterday, down about 1%, and then today we gap lower. And not only did we gap lower, but it just absolutely starts falling apart. So we got caught in a big crush right there. At this point, and this is just strategy, and I talked about this morning. When we have a situation like this where we have something that moves rapidly against us, where from an area that we feel comfortable with the trade to an area where it feels very uncomfortable down here, where it feels like, yeah, this is kind of breaking down and it's going to take more time. This is in what I would consider salvage territory, where tomorrow morning I'm going to see if we can't pick up some of the scraps right here and take a smaller loss on a position like this, if it can come up here back toward 50 maybe. But it's out of the area where I'm going to trust it to, like, all of a sudden magically pop higher. I don't have any type of delusions in thinking that this is going to be back at $55 in a hurry.
Yeah.
We've obviously hit some turbulence, and the market is telling us something right here with this information. So I would like to take a smaller loss on this, at least attempt to, over the next couple days, and we'll see what the market gives us there. But when we have a big gap lower like that in the morning, and then instead of catching in this area around 51 where it seemed to be selling in pre-market, it just starts dropping on us. Yeah, that's rough, but that's how it goes with a trade like this. So I mean, that's the way I think about them, and how I would manage a position like that. When it comes to something like Freeport, it can give you some wild swings. I try to give it the benefit of the doubt on days like this where it looked like it was setting up for a bigger breakout. Then you all of a sudden, out of the blue, you have a day where it's down 3%. The next day it erases that, and it's up almost 4.5. So we got caught in a bad spot right there. And if we look at copper, I mean, you can see silver's down what, 3.6%. Copper deep in the red today. Maybe this catches here. Maybe that's what it needed, and it pushes higher, and we have a pivot, and we can get out of that trade, with a very small loss. Maybe it doesn't, but I'm willing to wait till tomorrow and see what happens and manage it from there.
Yeah. Yeah. And a few comments coming in. And then, like I said, I think we're going to wrap it a little bit early here. Patrick said, and this is a good point, like never to be really evaluating your options on the options price. Because again, it's a
Right.
weird spot to be being like,
Yeah.
oh, if you want to have, you can have stop losses. It's all up to you. But like, you can't look at that option and be like, oh, does this make sense being down 79%? You got to look at what the risk reward is according to the underlying stock. And that's what Gunner's doing here. And then Holly had a good question that I think is really good for the group. Gunner, do you ever think of like, I guess in particular here, like, would you ever roll this into another option? Like, how do you think about that?
No, I wouldn't. I don't want to compound my losses by doing something like that. And also, like, I'd be
Yep.
looking out the longer time frame. I feel like that's something that we do when we want to salvage the idea in our head, if we're still like married to the idea. The trader joke is always that, like, let's say you have like a short-term trade, and then all of a sudden, like, you try to hold it over earnings and you get dinged up really badly. And then instead of selling it and taking your lumps, you say, I'm going to put that in my long-term portfolio. You know what I mean? And so, because I still like the idea of it, even though I'm getting crushed on this name, that's a great way to have a long-term losing position. And we've all done that.
Yeah.
I try to avoid doing that, because, like I said, like, I know that even if we are in a choppier market right now through June or July or whatever happens with this market, I'm going to get new opportunities tomorrow, Thursday, next week, next month. There's always going to be a new trade around the corner. I'm going to sleep better if I say, okay, this one gapped lower and moved hard against us. We had a big hard reset throughout the metals, sector, and that it is what it is. I'll take my loss and I'll look for a better trade tomorrow, look for a better trade next week, and I'll take what the market gives me instead of saying, let me try to roll this and I'll spend a little bit of extra money to hold on to this a little bit longer to potentially just, prolong the pain and suffering on this. No thanks. I'll move on to something else.
Yeah, I feel the same way. The only time I roll anything, it's not even a roll. Normally, I'm just buying more because it's like it's going in your direction, but you just don't have enough time. So you're
Yeah.
going to have like this modest gain, but you're like, no, I think this game could go 100, 200% up. So then you start looking a little bit further out, which would be the same mentality as rolling, but not on anything that pulls back. Like that's how you compound losses, I believe, as well. So, Gunnar, appreciate all the help. We're in the chop here. For anyone that's in the trading desk, it's in Gunner's paid publication. You can go in. The chat's open 24 hours a day. But if you want to go in there, continue the conversation there. Otherwise, Gunner will be back online in the morning. Obviously, as he said, taking a look at that, hard look at that FCX position and seeing whatever is out there in the market's offering. So, Gunner, thanks again for the help, and everybody out there. We appreciate your comments and writing in here on YouTube. Give us a like and subscribe. Don't forget about the good stuff. Gunner, we'll see you next week. Tuesday's coming. We'll have more top trades.
Thanks a lot.
See you guys.